Hey folks, welcome to the Rain Channel. Patrick Francie here, and today I am joined by Mark Ferris of Ferris Capital Group. Mark, thanks for joining me. You're our newest trusted partner within the Real Estate Investment Network. You got some really cool stuff going on in Florida that we want to talk about. So welcome to the Rain Channel.
Great to be here, Patrick. Thanks for having me.
So, Mark, we were talking a little bit offline. We got talking about presidents and candidates, and those are always fun conversation. You know, there's always a warning: don't talk politics or religion.
Yeah.
And I love to do both. But anyways, let's talk about real estate and what you've got going on in terms of what's happening in Florida. Give us kind of an overview of what Ferris Capital does, and our viewers let us know.
Yeah, sounds great. So, Patrick, just a little background first. I mean, we had been originally from just north of Toronto, and we had been investing in real estate all along from basically 2008 up until a few years ago. And one of the big problems I was running into was, I mean, there were two big problems. Number one, it was harder and harder to find cash flowing properties. So properties where income would be over the actual expenses. So we're putting money in your pocket, as Robert Kiyosaki loves to preach. And so it's hard to find these deals. And number two was rent control. Like we were having units, in Ontario where they're paying $650 and market rent was $1,650. And it was a real battle. So it was very hard to execute on a business plan to get in, push rents and sell. And so a couple of years ago, we ended up picking up, and we ended up getting a place down in Florida, and the kids are going to school down here. And I started looking at Florida real estate and realized, wow, like this reminds me a lot of when I first started investing in real estate, where you could find single family properties even that would cash flow. And when I started diving further into it, we had been investing in smaller multifamily in Ontario, 10 units and 14 units. And so we thought we were doing fine. When we came down, we started really digging into, okay, what about 10 units? Well, what about 50 units? And then we started to get into larger stuff, the institutional stuff, the 100-unit apartment buildings, value add approach. And we realized, wow, like there's some real economies of scale here. You can find deals that will actually cash flow between like 5 to 7%, and then spit out returns at the end of the business plan, like 15% and higher is like, it's very normal down here. And so that's where we really found like, okay, there's a big opportunity. But when we were speaking with a lot of investors, they said, it's hard. Like I'm busy. These are high performing business people as well. They have money to invest, but they don't have the time to figure out the tax situation and all the rest of it. So what if we created a very simple, easy button approach for real estate investors to get access direct to these deals and be able to invest very simply and get exposure to these apartment buildings and the upside of them. So that's where Ferris Capital Partners came in.
Now, and so you've been down there for a while. You've got what 120 million under management, something along that line.
Yeah, so we had scaled to about 40 million on our own, and then when we came down, we ended up looking at, there were two deals, one in Jacksonville. This is a 334, more of an opportunistic deal where it was a hotel to multifamily conversion. And so we partnered with really strong operations construction partner. And so we ended up taking down that. And so we got the permitting and the conversion prior to closing on that. And so we're going through construction on that. And so we ended up raising a good chunk of, we ended up raising 5 million from our Canadian investors in Canada, and we brought that down to that deal and are there on a weekly basis from a partnership side. And then the Venice deal just south of Sarasota is 243 units. We brought 6 million in on that deal and are there on a regular basis as well. So we got to see from a partnership side two really different types of operators and two very different types of deals. So as Jim Collins says, fire a bullet before firing the cannon sort of approach. So that really taught us and showed us, okay, where do we want to be? And that second deal, that value add approach, cash flowing deals is more what we were looking for. So that's where we fired the cannon. So over the last 6 months, we've been selecting and building out the best team we could find to be able to take down that next deal. And we're currently hunting for property. So we have a full-time team of 7 now. and we're getting very close to taking down our next deal. There's some really good opportunities out there now.
So fantastic. I got some questions I'm going to ask you about those opportunities in a bit, but I really want to kind of have you give us an upside or an update, if you will, of why Florida. I know that
Yeah.
when you look at what's happening in Canada right now, specifically when you look at, Ontario, Southern Ontario, less in Alberta, but again in BC, where buying cash flow properties is tough. Cap rates on multis are really just bad, full stop,
Yeah.
and depending on where you really are kind of now narrowed down to just Alberta to kind of get any cash flow in a single family. And of course, in the multifamily space, you can't find anything because it's mostly pocket listing. It's just
Mm.
harder,
Yeah.
you know,
Yeah.
gig.
So there's still the same story. I mean, the brokers down here are the key to the kingdom. So it's about building relationships for
Yeah,
sure. But going back to your question, why Florida? Those are like the big two right off the bat. There's no rent control, so you can
yeah,
go in and execute a business plan. So at the end of their 1 year lease, if they're underpaying, like in a couple of our units in Ontario, they're $1,000 below market rents, and you just can't do anything. Even cash for keys. Our last offer is 25 grand and they're like, no. Well, at the end of the year lease, you can bump rents to market rents, and you can actually go in and renovate and push rents that way. So no rent control. You can cash flow on deals as another one. Uh, from a population growth standpoint, it's been the hot spot in regards to where people are moving.
yeah.
And the big reason for that is taxes. There's no state tax, so people are keeping more money in their pocket.
Mhm.
There's also there's sales taxes at 7-8%, whereas we're paying 13% in Ontario. And so, there's again more in their pocket as well.
Mhm.
It's strong leadership. They want growth, strong employment. They're giving lots of employers incentives to be able to move there. And it's affordable. Like they're paying from an affordability standpoint, that they're paying between 30 to 35% on average of one's income towards rent. Whereas like Barrie, for example, is where we're originally from, just north of Toronto, it's more like 50%. And
Yeah.
Toronto, it's more like 60%. You got New York more like 70. So there's opportunities to go in and bump rents where people still have the ability to be able to pay more. And so we're looking at these markets right now, and this between 30 and 35%. This is
Well, I think
after we do the renovations and push rents up. So
I
there's
think what's interesting about this market, number one, to your point, I'm a fan of DeSantis simply because of the leadership that he's provided for Florida. Love him or hate him, the results are there, and it's showing up in the results. And so when we're looking at placing capital, we are there's a phrase that we often use is making our capital work harder for us than we work for our capital. And
Mm,
right now, depending on what it is that you're trying to do in the space of investing in real estate, the US is appealing, but specifically Florida. Texas is another conversation, but we're talking Florida here because that's your space that you're playing in right now. But ultimately, that particular environment is good for real estate, and we're going to talk a little bit about that. And as well is that when you look at where investors are from Canada going into this, trouble getting financing, trouble finding cash flowing properties, this is an opportunity in terms of investing capital where you're not applying for a mortgage. You don't have to qualify.
mm.
You have to be an accredited investor. But give me a little bit more in terms of, Mark, is when you look at what's happening in Florida, you see opportunities. Now, are the opportunities there because of what? Have you got old tired buy or vendors? Have you got properties that are a little bit upside down? Like, what is your kind of buying strategy in terms of 100+ units?
Yeah.
What are you looking at from the motivated vendor side of it?
Okay, so there's more of kind of the high level, and then so Florida overall is interesting, and then I'll zoom more into the on the ground. But Florida state GDP is at $1 trillion. From an overall world global standpoint, that's the 18th largest economy in the world. So Florida is huge, and there's a lot of money there. And yeah, like you said with DeSantis, whether you love him or not, he knows how to build business,
Yeah.
and there's a lot of businesses moving there. So if you were to zoom down now into like the actual buildings that we're going in touring, we're getting close. We're doing a second showing on a couple of buildings tomorrow, and so what we're seeing there are basically from an operation standpoint, there's a huge there's huge opportunity to be able to get in from an operational excellence standpoint. If you have a business plan and can execute it, and in a very efficient way, there's opportunity out there, because not everybody runs it as a company. It's more, I'm gonna, as you know, Patrick, some operators, it's more so of a passive approach, whereas we're building like an actual team, and I've built a team to be able to get in and treat it like a company. And so each of these businesses, or we look at them, these buildings, they're a business in its own.
Yeah.
So there's right. So, and not, there's a lot of operators that just, there's some great and some not so great. So we're seeing with pricing coming down now, that there are a lot of operators that got really, we'll just say, overzealous back in 2020, 2021. Down here, you can actually buy these rate caps where it'll lock in after a certain amount. And so some of these guys, they could have bought these rate caps at like 50 to 100 grand, which is pretty inexpensive on these larger buildings, but they elected to pass on them. And now with rates doubling, their debt payments have now doubled. So there's a lot of operators currently right now that are just holding on. And you saw there's a report of one in Houston, a whole development, where it was just lack of business plan, lack of execution, and just overzealous. Oh, the market's going to always go up. So for us, when we're going to these deals, there's three things to really mitigate risk that I've found. As long as we do this, because I went back to 2008 and saw that in like the Armageddon of real estate, when there's subprime mortgages, that rents only drop in the 50 unit plus area down in Florida. They only drop 6% during that time frame. Values drop by 40%. But if you did these three rules, if you did these three things, you'd be completely fine and be able to weather that storm. As in, so if you do these three things, you can weather any future storm from a safety standpoint. So number one is buying deals that cash flow. So if you're cash flowing 6%, even if rents drop by 6%, you would have still been breaking even. You could have carried that along. Number two is adequate cash reserves, just over raising and making sure you have some extra cash reserves at the property level. And then number three was locking in some sort of rate cap or long-term debt. So your interest rate. So even if rates double, you're going to be protected. So that's where with execution, there are a lot of operators that didn't execute on those three principles. And that's how you really protect your downside. But then through operational excellence and getting in and pushing rents aggressively, that's how you can push it on the upside and force these values and better returns.
So when I love what you kind of pointed out there, Mark, because those oversights are where the opportunities show up, right? And that's what's great about it. And then you get to put in the correction and knowing, because those 3 points that you made are kind of foundational. Yet when markets are hot, or maybe because they were done years ago, who knows? But ultimately, operators make the mistake, and then they get complacent, and then they get caught, and that's where opportunities get to show up for somebody like yourself that's savvy in terms of running it like a business and looking for those deals. Now, tell me a little bit about you're looking for minimums into this particular whatever projects you got going on. You're saying 100 grand minimum in terms of 100 grand US for Canadian investors to come in, have to be accredited. Anything else you want to add to that, those details?
Yeah. So, I mean, for those that are listening and watching, a credit investor, basically you don't need to do anything. It's more of an income qualification, as in you make $200,000 personally, or if you within a household is 300,000, or you have $1 million liquidity, liquid assets, or 5 million overall net worth. There's the 100,000 US minimum is what we're looking at. And for us, it's just more so, it's not about like sheer volume of numbers. It's more about we really want to partner, because these are investors are coming in beside us as a limited partner. We want to partner with other high performing investors that are really looking to build something large. And so for us, first class service is one of our core values. I found that was another whole other experience that I found. It's just very lacking in the space of investing overall, of just babying and looking after the investors. And, communication is a perfect example of that. If you're going to say a monthly update, it's like, it should be on the same day every single month. Right. And same with the quarterly. If there's a quarterly webinar, and you're going to be doing that. Like it should be at the same time on an ongoing basis, and you're not missing things, right?
Mhm.
And so these are like very simple, like basic items that I wasn't getting in the past. So that's been a really big one. Overall returns we're hunting for. So part of the beauty of these deals is not only upside. So our deals are between that 15 to 20% range is what we look to build to give back to our limited partners or investors, investor partners. But then we also do cash distribution. So that's on the same day on the first of every month. This is from cash flow is arriving in their accounts. And
No.
that beauty of that is it's in US dollars. So you can build a nice big fat US account, which is wonderful from a diversification standpoint. So you're getting access to that US dollar, which is the world's reserve currency. So yeah, overall, these projects, it's between 2 and 5 years as well. That's another question that gets asked quite a bit. But if we execute faster, which is the game plan, our game plan is to execute on the business plan, push rents, and then to exit the buildings and get those returns back to our investors as fast as possible. But we won't trade. We don't trade. We want to make sure that we do it right and we get the
Yeah.
right returns back. So we're going to make sure we do a good job on that. So it might take a little longer, but 2 to 5 years is the range.
Now, the other question that will probably often get asked is around RSP or TFSA. Can
Yeah.
they use that kind of capital?
Yeah, so it's a good question. So basically, that would need to be a fund model. And right now, the way we structure these deals, it's a single purpose vehicle, which is
Yeah.
basically so it's just per deal. That's what you're investing in, and so our investors really like that. It's like Mark, present the deal, go over okay the team, the market, and the deal specifics of it. Go over and stress test that deal and present it to me, and then I can decide if I like that deal or not. Versus like just put it in a fund and then you go do your own thing. So that's been actually really great. And why our investors really like that as well is because we bring them along for the journey. So everybody that's invested with us, they've owned some sort of real estate in the past. So I don't need to sell them that real estate is the winning play.
Mhm.
But they're busy. Like they're making great income. Making money is not the problem. It's finding a great place to invest where real
Mhm.
estate's always been simple in the past. But now it's hard, even for me as a broker. We scaled up our real estate team to a very, very large group, and I couldn't even find them in our area. You got to be creative in how you do it, like buying the corner lot and severing a piece off, or adding a third unit to be able to yield these types of returns. Whereas this is very simple. We go and buy large apartment buildings. We execute with operational excellence. We tie in a very strong marketing element. We're seeing there's a lack in this at this range, which is shocking. Simple
Mhm.
things like the as soon as you walk in the reception, it should be staged. It should have a certain scent. Like if you're going to do a renovation, like just finish it right. And so it's like you'd be surprised. And so for us, we're really looking at taking what's out there and just being a little better. And that's what I found, success in the real estate that we've had is not because, we're completely different. It's like we've done everything just a little better and we just show up every day and
Mhm.
we don't lower our standards. We have high standards and we're disciplined on a daily basis with it.
It's fantastic. So as we wind things down in this particular conversation, first I want to shine a light on that. Although you are new to being a trusted partner of the Real Estate Investment Network, and first time in the Rain Channel, ultimately you are and your team are very experienced in the investment world, and it was just a great opportunity to bring you in as a trusted partner to give the community opportunities to get their capital to work outside a little bit of diversification outside of Canada, which I think is just a smart move. It's a different world, and of course, one of the reasons that Florida is doing what Florida is doing is because it's a different world. Things have changed, and through that leadership of that state, I mean, gosh, things have really turned around for Florida in a big way, and we see lots of opportunities continuing to show up. So, anything you want to add as we wind this down? I'll leave it over to you in terms of how you see the future of real estate in Florida.
Yeah, I'll just say, I mean, to final thought for me, which is it was a big thing because I had always invested my own money, right? And it was okay if I lost money, although we won in every single deal we did. we had a good return, but we had built a strong, like we'll do over $1 billion in sales volume on the real estate side from a team side. So for me to be able to say, okay, I'm now going to take somebody else's capital or equity and actually invest it. This took me a while to get my head wrapped around to feel comfortable for doing it. Because if losing my own money was one thing, losing somebody else's, that becomes this whole other thing. So for me, it was really, I wouldn't be doing this unless I really had a high amount of confidence and I knew exactly what it is that we're buying. So that's why we won't buy like new development. Like I like to go and touch the building, and I like to go and walk through all the comparable properties to validate. So in my head, if I'm going to take my own money, that's one thing. But if I'm taking, John's and Sally's, and I know that they all worked their whole lives and they have this money, and some people, it's like, that's a good portion of what they have. And I'm going to take that and I'm going to invest. I better be one, absolutely confident in the asset class.
Yeah.
And then two, I need to be absolutely confident in the team to be able to execute on that. So that's why it took me the last 6 months to be able to assemble this team of experts to be able to execute on this. So the multifamily space, and you see this and with a lot of investors, they start in single family and then they work their way up and eventually they get into the larger multifamily apartments. And one of the reasons is it's one of the least amount of downside, but with the most amount of upside. Is such a good balance. You just need to get in at ground level and not going through multiple layers like with REITs, and how they'll go in and buy and push rents and then they'll sell it to their own REIT. And then, so if you get direct access to these deals that institutions are actually getting in and buying, you can do very well. And so for us, that was it. It was like there was an idea there that, and almost like this, there was an overall like rallying cry for Canadians to be able to get access to these deals. And so that's where I felt this was the play to go. And then tying it together with a very simple process to be able to invest where you're not doing double tax returns. We look after all the withholdings, but you're investing with US dollars. And then we issue a simple tax return at the end of the year. And you get your distributions and then the upside when we go and sell the building as well. So I don't take it lightly. And it's because we did the due diligence. I feel confident enough to be able to put my name behind this to be able to get returns back to our investors.
And it's one of the reasons we're excited to have you as part of the trusted partner group that we have within the Real Estate Investment Network and our community. Mark, thank you so much for the time. And folks, I'll leave a link in there, but you can also go to FarisCapitalPartners.com, Faris as in Faris, capitalpartners.com, to find out more about Mark and his team. And Mark, thanks again. Look forward to touching base with you in the future.
Thanks, Patrick. Appreciate it.